on board Anish Tawakley as well and find out what he's making of the market right now and what he advises investors should be. Anish, hi, good morning. Good to have you on the show. Anish, I guess a
Morning.
lot of hopes and eyes are pinned on the two central bankers. That's both India and US. Should it deviate from a rate cut, Anish? What could the market reaction be?
Look, I think the economic impact, which is what I would focus on, of a Fed cut is not very much in India. So if the market reacts negatively, I would view that as a buying opportunity, right? I can't predict how the market would react, but there is not much economic impact from whether the Fed cuts or not. And I am personally of the camp that even if the Fed cuts this time, this cutting cycle will be a very shallow cutting cycle, given that inflation expectations in the US have moved up, and the Fed is fairly concerned that it will be difficult for them to manage inflation if inflation expectations move up.
Anish, how are you placing your portfolio given the fact you have so much of volatility in rupee and and we are going towards a quarterly and yearly closing there towards the end of December? Are you making your portfolio less risky to these kind of risks?
No, actually, let's first look at what's happening on the rupee. Actually, our current account is actually still in pretty good shape. The volatility in the rupee is arising primarily because of the capital account side. And to the extent that the current account has increased, it's only because deficit has increased, it's only because of gold. And actually, gold is not a consumption item, it's more like an asset outflow, it's a funds outflow. So I treat gold as a capital account item, right? So effectively, what I'm saying is that the current account is in very good shape. And there is volatility in the rupee only because of the capital account. Now, when that is the case, I don't worry about the rupee weakening, right? In fact, I would say that it makes a strong case for intervening in the market and defending the rupee, because the current account reflects the reality and the capital account reflects the moods of the market, right? So I would not worry about the rupee weakening further. I would actually say that the rupee has already should actually strengthen from here. So at this stage, right, what I'm looking at is the domestic economy. And we are fairly positive on the domestic economy. We expect the domestic economy to gain momentum. And our portfolios, at least my portfolios, are positioned for a recovery in the domestic economy. So we are positive on the domestic cyclicals. So stuff like automobiles, cement, industrial and capital goods, and financials excluding the consumer unsecured lenders. We are positive.
Interesting. Oh, yeah, and much of it has already begun to play out. One can see that with the numbers from autos as well. But Anish, why cement? And if cement, then would it also be other discretionary spends like paints and maybe trickle down to realty from a macro perspective?
So I am of the opinion that for the Indian economy to do well, the home building and urbanization sector has to do well. It's a one-on-one relationship. Once the home building and urbanization sector does well, the economy does well. And when that sector falters, the economy also falters. So our view on cement over the longer term is positive. And in fact, I would say, if you look at cement, it's the only sector in this country which actually under-earns. The profitability is very low. Historically, that's been the case because the sector has been very fragmented and people have added capacity well in advance of demand. And that, I think, should change. Every other sector has very high levels of ROEs. Cement is the only sector where ROEs are actually very low. So I'm positive both from the demand perspective and from a profitability improvement perspective. And the sector has corrected. So there's no reason to, at this stage, not be positive on it.
But Anish, hi, good morning. This is Harsha. Why the focus on cyclical sectors over maybe structural stories? What's the rationale behind that view that you have?
Well, I'm not saying one doesn't look at structural stories, but when I look at structural stories, that's more by the way of stock picking. When I pick sectors, that's where I take a cyclical view. I don't believe that there's any sector where every company does well over the a 10-year period. If you're looking at structural stories, you have to look at specific stocks.
And you're seeing, Anish, some kind of value buying happening in small cap and mid cap space, given the fact that these stocks have corrected a lot during the year?
Actually, we've been cautious on both the small and mid cap space for a while, and small cap is now clearly playing out. I think I would not rush into that space in a hurry. See, our view has been that a lot of very, very weak business models have managed to get very high valuations. And that is why you see so much of promoter and PE selling over the last 2 years. And these stocks, I don't think the investors understand fully the risks in some of these stocks. I break up stocks into two categories, right? One, which if they fall meaningfully, they become more attractive. And there's another set of stocks when they fall meaningfully, people realize, oh, I'm holding it, but I hadn't understood the risks, and then they come and liquidate. So I think there is a significant segment of the small cap and even the mid cap space where that is likely to happen, and I would not rush into that space at this point.
If I can, I am well aware that you're not allowed to talk names, but give us sectors, pockets, spaces where you're feeling that there is froth, which is what you're referring to.
I think I would look at almost the entire IPO space. I would look at, say, the recent IPOs. Whether so it's not just sectors. I think every single sector in the IPO space has done spectacularly well. So one needs to be cautious in those spaces. There are stocks that have price to book. See, look, it's been very simple. You start a company with 500 crores, market values it at 5 times book. You sell 25%, your 500 crores is back, and you still have the company, to run. So that is something that is unwinding, and that's a good thing.
Yeah, it is. Which brings me to, since you are bullish on consumption as a trend, Anish, what about consumer tech? And some of these companies are relatively newer listings as well. What's your
No,
opinion
I
there?
actually, I'm not particularly biased towards consumption. When I said domestic cyclicals, I'm including the investment-oriented sectors. In fact, one of the things that I think was misread by the markets, right, in terms of the stimulus, was thinking it's only a consumption stimulus. Actually, it's a spending stimulus. Now, that spending can be consumption spending or it can be investment spending. And when I say investment spending, so if you have more disposable income in your hands and you bring forward your home purchase or you buy a larger house, that goes in as investment spending. And in fact, even if it is consumption spending, the idea of giving that stimulus is that spending will then increase demand, which will improve capacity utilization, and then people will invest again. So I was never of the camp that only the consumption sectors should benefit from a stimulus. A stimulus benefits the overall economy, and in fact, the ultimate objective is to get capacity utilization up so that the capex restarts.
Understood. So, what about consumer tech then? Anything that you specifically like?
So, look, I have a bias in my framework for companies that have a demonstrated track record of profitability, and I am wary of sectors and companies where we haven't actually seen that. So, in consumer tech, and a lot of it happens also to be fintech. Fintech, again, I'm fairly concerned about leverage levels in the unsecured segment amongst households. So I'm not rushing into the consumer tech sector per se or the fintech sector per se.
And Anish, with regard to realty, do you believe that the upcycle that we've seen can continue, and relatively are valuations looking okay? Given that there is low debt, I mean they're better placed in case of a down cycle. Are valuations looking okay at all?
Yeah, so realty is a sector that you can. So I'm positive on home building, right? And in fact, I feel home building will be essential for the overall economy to do well. It's almost a necessary and sufficient condition for the economy to do well. Now, you can play that directly through home builders, or you can play it through related sectors, right? And yes, realty you still have to pick the right stocks because there are, in a lot of cases, governance issues and the likes. But you still have to pick the right stocks. But that is a space that I think presents some opportunities.
Understood. Anish, great to have you on the show and good to get in your insights.
Thank you so much.
Thanks.